Hello, and welcome to this daily market commentary for Tuesday, the 29th of October 2019. I hope everyone had a positive start to the week. Equities dominated the headlines for Monday. So, what would happen on Tuesday? Well, initially we had a mild reversal of yesterday's FX moves, with euro dollar drifting down to 110.75 and dollar yen down to 108.84. This took euro yen down to 120.60. A good 40 points off its earlier highs. Sterling would have to deal with the confirmation that a December general election would indeed go ahead, December 12th, for those of you that are paying attention. Despite an initial sell-off down to 128.07, we were back to yesterday's close of 128.60 as the US day got going. Gold continued its move lower from Monday down to 14.84, that despite US equity markets eyeing a marginally lower open. All eyes, of course, will remain very much on tomorrow. That's Wednesday's Fed rate announcement. So as the US day got going, equity markets, having opened a little bit in the red, turned mildly positive. This would see euro get a bounce up to 111.18 and sterling to a high of 129.05, and euro yen back up to 121.05. But with the Federal Reserve interest rate decision now looming less than 24 hours away, the markets were happy to slow to a bit of a grind. Euro dollar did manage to hold above 111 by the close, but sterling slipped back to 128.60. Equities spent most of the day bouncing around either side of sort of flat, but in the end closed down marginally on the day, with the S&P down just 2.5 points from yesterday's close, or all-time high close. Gold would benefit from the slightly lower close in equities, running back to 14.89, but dollar yen would slip back down to 108.80. For Aussie, Kiwi, and Canada, it would be a mixed session, with the Canadian dollar weakening against the US dollar back towards 131 the figure, while the Antipodeans did make some mild gains. All of this, of course, could change very dramatically on Wednesday with the Fed. Expectations are for a 1/4 percentage point cut, but of more interest will be the guidance given by Chairman Powell. So, to finish off, a little technical piece here. And ahead of the FOMC meeting tomorrow, I thought it was worth taking a look at the US dollar index, or the DXY as it is sometimes referred to. We have looked at this before and have noted a long-term up channel going back to mid 2018. As you can see, this goes back to June, the way I've drawn it, but I guess technically you could probably even go back a month or so earlier than that. As you can see, we are still in this channel, but it should be noted over the past month or so, we have, we have moved lower. As you see, we've dropped from 99.70 almost down to 97.15 maybe, although we still are in this channel. So the dollar has given up some ground, and intuitively seeing that on the chart, we know that over the same period of time, we've seen sterling running from 121 to 130, although that's really been more about sterling than it has been the dollar. We've seen euro move higher from 109 to 111, and we've also seen dollar yen bounce from 105 to 109, which has probably been more a reaction to the positive move higher in the stocks than necessarily the dollar. But regardless of what the catalyst, the dollar has given up some gains. So this chart we have here is somewhat intuitive given what we've seen. The question is, are the Fed rate cuts beginning to weigh on the dollar? And will another rate cut put the dollar under further pressure and even potentially push it through the bottom of this channel? Hard to say, but all will be revealed in less than 24 hours. But I would say this is a chart you want to keep your eyes on, because it is a long-term chart. It has been fairly well defined, and if we should get a break, often when you look at a break, certainly on a daily chart, you would deem it to be fairly significant. So keep an eye on it. And with that, I wish you all the very best of luck over the FOMC meeting, and I look forward to speaking with you soon. Cheers.